Good morning, everyone. Welcome to our Friday morning trading session. Hang on here just one moment. Okay, you should be able to see my screen now. What we're looking at here is the NASDAQ with the DTS system along with the new Raptor. And we just saw the market open, and it looks like it's open with a little bit of a gap. Allow me to highlight that for you. So we'll take a look here at the Eagle, and you can see yesterday's session, really just a textbook sideways kind of trading day. Never really did get outside of that range. And we finished off down here around the 51.50 area, 48.50. And we're opening way up here at around 51.68, actually falling off right from the open bell. Okay, we'll give them a few minutes here to kind of get their bearings. You can see here on the Raptor that we got a cloud crossover signal about at 45 minutes before the market opened. That's not unusual, by the way. Very often there's some reports and whatnot that will tend to influence the market about an hour before the open. That's why we'll see things like opening gaps. Okay, while we're waiting, I think we're going to see maybe a little bit of a reversal here. It seems as though prices giving us a little bit of a double top now, itty bitty double top here at the 51.68 area. We might get a soft edge sell opportunity here. While we're waiting on that, okay, I'll deal with Christian's question. Christian asks, Eric, do you think during the trading sessions about any optimization of the Raptor settings when a trade has been stopped out earlier than you want? Or do you think it's better for the strategy to trade the Raptor signals as the Raptor displays? I'm afraid for the over-optimization or playing with the settings every day after a loss. All right, so I guess what Christian is asking is, do I consider tweaking the settings after I take a loss? And the short answer is no. Not usually. Losses, unfortunately, are a part of trading. And you need to take steps to protect yourself. And we do that by doing our best not to risk more than we can afford, and by correctly managing our trades. I think, if you take a look at why did you take a loss on the trade? Was it a poor signal? Or did you just not manage the trade correctly? So for instance, let's look at this signal here. The Raptor's saying, okay, it's a number one. Did you get stopped out because you placed your stop right here? When maybe if you kept it up here, you would have realized a profit? So it's not necessarily that the signal was off. Yes, you took a little bit of heat on the trade, but it was still a profitable trade. Was that a losing trade, or why was that a losing trade? If you can nail that down, then I think you'll have a better idea what it is you need to do. Again, that boils down to why journaling is so darn important. Okay, we're getting a first micro macro cross here. It's early. I may try to run this out. And definitely stops need to go up there because it is a counter trend signal, and we may well see another test of the extreme. Another strategy is to wait on a second push entry, in which case you would take it below the low of this bar right now. The Raptor, of course, much more tweakable than the other trading tools. The programming on the others has been locked, but the Raptor, you can make a lot more adjustments to it. Just making a couple notes here in my trading journal. Okay, they're struggling a little bit on this first micro macro cross, but we're holding in. But a proper retest of the high, not out of the question. We're also getting a trend change signal here in the Falcon, and you do have an opportunity for a second push entry on this one, which is nice. So the signal printing right here, the market showing you its current limit, and then we can re-enter if it heads lower. Okay, David asks a great question. I'll get to David's here in a moment. All right, I'm going to wait on that number 2. We should get a soft edge sell signal here out of the Raptor. Okay, just let me make a note here, a real quick note about my Falcon trade, now that that one's active. And then we'll get to David's question. Stinkers. So we got a break even stop out on the hawk. Could be my break even was a little bit too cozy there. Okay. So David's asking, Eric, I'm not used to seeing such large stops as you just did in the NQ. So if the price started to reverse and come up to that stop as it traveled, would you decide to exit or let it be stopped out? All right. Very important concept, stop losses. So here's our trade. Here's our first micro-macro cross signal. Where do most traders place their stop loss? Well, most traders put their stop loss right there. They say, ooh, I don't want to risk very much money. I'm going to put it right above the signal bar. And what ends up happening? Well, the market brings you in and then immediately stops you out for a loss. Now, I know you're looking at this and you're saying, oh, no, there's no way I would be trading 7 contracts at $385. My question would be, why not? If this is where you want to place your stop loss, why would you not risk the full amount and try to maximize your earnings? Most people say, oh, no, Eric, all I would do is I would only trade a single contract. So I would only risk $55. Okay, well, you risk $55, you just lost $55. What is the point of your stop loss? I know it seems like a stupid question, but really most people never consider what is the purpose of your stop loss. What's the whole point of having a stop loss? Your stop loss does 2 functions for you. First off, it protects your capital. It is your safety net. It gets you out of a trade that you were wrong on. Okay, so that's the first function of your stop loss, is it protects your capital. What's the second function of a stop loss? It tells you that you're wrong about your trade. Well, if I place my stop loss right here above this high, how do I know I'm wrong about the trade? Right? If the market moves 7, 8 ticks against me, is that enough to say, oh no, I'm wrong about that trade? Here, let's take a look. This is even a better example. First micro-macro cross higher. If I place my stop loss right there, market brings me in, moves 8 ticks against me, stops me out, I have a $400 loss. So I know, again, you're going to say, oh no, Eric, I would never do that. I would only put a single contract on there. I would only be risking $50. Okay, well, same difference. You're out for 50 bucks. How do you know you're wrong about the trade? Because in actual fact, in hindsight, we know you're not wrong. You were right. Oh, well, Eric, I would re-enter on the next signal. Okay, so let's do the next signal. Next signal is right here. You do the same thing. Market brings you in. Oh, guess what? You're out again. Now you've got a $100 loss. Oh, Eric, I would enter again on the next signal. Market brings you in, stops you out. You're out now $150. Oh, Eric, I would enter on the next signal. The market brings you in, stops you out, or brings you in and finally starts going in your direction. So if you actually had the nerve to re-enter on every single signal after getting stopped out and stopped out and stopped out, you would be down $150. Now, I have a friend who trades this way. In fact, his stops are even tighter. His stops will be like $30, and he will routinely get stopped out 6, 7, 10 times on a trade before the trade starts to go in his favor. But even in this example, you got stopped out 3 times to the tune of $150. So why would you not at least run a $150 stop? What's the difference? But even running a mechanical stop like $150, how do you know that you're wrong about buying here? This is a first micro-macro cross. This is a high probability signal. How do you know you're wrong about buying when, here, let's make that a little bit tighter just to emphasize the point. You get stopped out and the market goes on without you. How do you know you were wrong? You don't. The only place you know you are wrong is if the market reverses below this point right here. So how have I just done the 2 functions of a stop loss order? Well, function number 1 is I've controlled the risk. Right? I've protected my capital, which is what a lot of people assume is the sole function of a stop loss. I've protected my capital right there. I have only risked 2%. If that is too dear to me, I need to dial down that amount. Maybe 1.5%, maybe 1%. The second thing I've done is I've found a point where I can say without a shadow of a doubt, I was probably wrong about this trade. So if the market brings me in now and the bottom falls out of the market and I get stopped out, I can say without a doubt, yeah, I was wrong about that trade. I should get out. But until this point gets hit, I'm still on the right side of this trade. So the market brings me in, moves against me, moves against me, moves against me, and now starts to go in my favor. I don't need to leave my stop loss down here anymore. I can bring my stop loss up here. Right? That's another thing people forget, is you can actually move these things. Or I suppose if you're like most traders, you get too anxious moving them and you stop yourself out prematurely. So I mentioned this the other day, but you really ought to think of your stop loss like a safety net or like a parachute. This is to protect yourself in the event of an emergency. You know, you're walking the high wire, you slip, you fall. The safety net keeps you from going splat. Same thing with your stop loss. But it's not much of a high wire act if your safety net is right here, is it? And maybe a high wire act is the wrong analogy to be using. But I see people all the time strangling their trades. They put in their stops so tight the trade has no opportunity of success. So now the trade starts going in our favor. Now we're actually profitable. Now we've actually taken out the swing highs. All right, maybe we'll bring the trade to break even now. Or maybe we'll hold and we'll try to ride out the next swing. Okay, we just rode out the next swing. Now we can safely bring up our stops. Ride out another swing, bring out our stops, and so on and so forth. A double top there, bring in our stops, or you could be using one of the stop strategies. You could be using like the ATR, and look, the ATR does it practically the same way as we just demonstrated. And there you go, you get stopped out, and you've done pretty well on that trade. You've probably made about $250 trading a single contract. But had you kept your stops so tight that you took, you know, those 3 hits first, well, you're already down 150. So instead of making 250, you've made 100. So, you know, I encourage you to keep a reasonable stop. Allow your trade the opportunity to get profitable. And this is, you know, folks, this is just something that I see from coaching people. And I always ask them, why are you keeping your stop so tight? Oh, well, I don't want to lose any money. Well, I got bad news for you. If your objective is not to lose any money at all, you're in the wrong business. Because there will be times that you're going to incur losing trades. It's just the nature of the business. So when you do incur those losers, make sure you haven't lost more than you can afford. Ray Burke and I, when we were working on the DTS system years ago now, and we were testing signals, and Stephanie, for those of you who have been around long enough, will remember Stephanie as well. Stephanie was one of these people who just loved ultra tight stops, and we'd be reviewing the signals, and Stephanie would be going, oh, this is a bad signal. Oh, this is a bad signal. Oh, this is a good signal here. And I'd be saying, wait a minute, Stephanie, why is this a bad signal? Oh, well, you got stopped out. I said, where's your stop? And she said, well, my stop is right here. I said, why would you put your stop there? And she didn't have an answer. And really, why would you put your stop there? There's no fundamental reason for putting a stop there. Right? Is it a significant level? Is it a support line? Is it a line on our, at least a line on our support and resistance suite? You know, you could say, well, it's an even number, 5150. Yeah, okay, well, that doesn't always mean very much. Was there support shown in price recently? You know, you could, if you're at the very least, you could say, okay, well, there's some support down here around the 51, 45, 46 area because the market's bounced there a few times. All right, well, I could go with that. Let's put our stops down here then at 51, 45, 46. If it trades through there, then it's time to get out. But let's put it under that level, not at that level. And look at what happens. The market comes down, retests that level, and then goes up. Okay, that's fundamental. But just to arbitrarily place your stop, that makes no sense. I always mention to Ray as well, if you can afford the risk, you take the trade. It's as simple as that. So if you're looking at a number one signal, if you can afford the trade, you take it. If you can afford the risk, you take the trade. Because there will be an opportunity, very likely, at least one opportunity to adjust your stop. Now, it may not be a very good opportunity. The market may come down, come down, come down, and then go up a little bit. Well, at this point, it's hardly worth adjusting your stop. For the $30 or $40 you're going to save, you may as well leave your stop down here. It's more fundamentally sound. And then if the market goes up a little bit and up one more and starts to reverse again, well, at this point, you can be reasonably sure they're at least going to run this stop. So you can either try to wait it out or you can bring your stops up. But again, you're making decisions based on what's going on, not just some arbitrary decision saying, oh, well, I'm only going to allow one bar or whatever. Here we're rolling the stop because the buyers got stronger, they're moving up, and all of a sudden the sellers are knocking them down again. Okay, the buyers look like they're overwhelmed. I don't want to ride out another swing. I'll take the early stop out. So whereas I may have had almost $300 at risk, I'm going to lose $150 if it trades any lower. Or if you think, on the other hand, no, I'm going to give this trade every opportunity, knowing that my risk is contained at an affordable amount, there is a chance the market will swing one more time, right? Or at least show you a bar that's hesitating. And if you see that bar that's hesitating, you say, all right, that's enough. That's all I'll give them. I'll bring the stops in there. So even if I get stopped here, instead of losing almost 300, I'll lose 200. So whereas I may have initially risked 2%, now I've lost 1.5% of my capital. Right? So you're doing things to protect your capital, and I think that's so important and something that so few traders ever pay any attention to. I mentioned this the other day as well, that professional traders don't do their risk-reward ratios in advance. They do them in hindsight, which is, again, the exact opposite of what most losing traders do. Yeah, like Curtis says, your stop loss tells you where you are wrong. So give yourself a decent start to the trade. The stop loss doesn't have to stay there. And sometimes I will end up taking a full stop out. Sometimes the market will just turn on its heels and make a run at my stop, and there's nothing I can do. Well, I do take comfort in knowing that the amount I lost, albeit unpleasant, is limited to 2%. This is a loss I can recover from. Might take me a day, might take me 2 days, might take me 3 days, but I can recover. Okay, a couple more comments here. Christian says, Eric, I can only confirm this since I use another stop, the chandelier. My trades are often more profitable. The risk is the same, but the quantity or contracts are smaller. And, folks, if you're trading a smaller account, your objective should be to get the account to to build the account. That should be your objective. Because trading is a numbers game, and it's not a numbers game in that the more trades you get, the more profitable you will be. But rather, the more you can capitalize on a profitable opportunity, the more profitable you will be. So rather than look for 10 trades a day, find one trade that you can trade with 10 contracts, or 2 trades that you can trade with 5 contracts. That will make you much more profitable in the long run than trying to find 10 winning trades, which is nearly impossible. Yeah, I agree entirely with Christian's statement here. Christian says, I think this comes from the wrong understanding of risk-reward ratios, that the stop losses are often so small for a better risk-reward, but this is wrong. Risk-reward is not important and is most of the time unrealistic. And I might add, done incorrectly. And we'll be talking about risk-reward and such in one of our future sessions, but no, Christian is absolutely right. Let's take a look at this. No, let's just go from here. And I'm only using the hawk because it's going to offer the most movement through here. Now this one may actually turn out not to be a good example. But what do most traders do? Well, most traders look at this scenario and they say, okay, well, I'm getting a sell signal. Let's get the sell signal. So I'm getting a first micro macro cross to sell. What do most traders do? Well, most traders immediately, their eye is drawn toward the profit side. And they say, oh, okay, there's some resistance there, old resistance, new support. There's my resistance. That's my profit right here. Therefore, since this is my profit and everybody says I have to have at least a 2-to-1 or 3-to-1 risk reward, I have to keep my stops only about half that distance away. So they put their stops there. They put their stops here and then, oh, stop it. I got it. Manual mode, quantity, click targets. Oh. Let's put it like that. So here's my entry, here's my stop loss, here's my profit objective. Okay, I've got my 2-to-1 risk reward. And I'll admit, on paper, this makes sense. But in reality, the market brings you in, it stops you out, and then goes on eventually to your profit target without you. And sure, you've incurred a $35 loss plus commissions and fees, probably closer to 50, and you don't feel too bad about yourself, but you'll do this time and again and again and again, and those little itty-bitty losses start to add up, especially since it didn't even need to be a loss. The only reason it was a loss is because you framed your trade based on the profit. And you don't know what the profit will be. Nobody knows what the profit will be. I don't care if you're George Soros. I don't care if you're Ed Sequoia. I don't care if you're Paul Tudor Jones. You don't know what the profit on this trade will be. Yes, everybody has a guess. And every once in a while, your guess will be right and you're going to look like a rock star. Then you say to me, oh no, Eric, I would never use this line here as a profit target. I would go with my profit target down there. All right, well, it's at least a little bit, it's going to allow for a more realistic risk reward. So you say, okay, well, I'm going to risk now 1/3 of that range. Does that look about right? About 1/3? So I'm going to place my stops above here. So I'm going to enter the signal here, place my stops up here, and my profit target is down there. Yeah, that's pretty close. So there's my 3-to-1 risk reward. Hooray! I've got a good trade going on. Market brings me in. Oh, darn it. Stops me out and starts to drift toward my profit target without me. So yes, Christian, you're absolutely correct. People base their risk on the profit side of the equation, and that, of course, is the side of the trading formula that we don't have the answer to. All right, so we've got a little bit of a downward drift here today. We're settling in on the median line. Still haven't seen a really good test of the extreme, which bothers me a little. Oh, Tony, I missed your comment earlier. Tony said my Raptor chart is showing a number 1 and a number 2. Number 1 here, so I'm assuming a number 2 printed somewhere around here for you, Tony. Are you still going off the default settings? Oh, Elmer says his too. And I know we had that difference just the other day as well. Where you guys, or I think I was showing one and you guys weren't showing one. Now you're showing one and I'm not showing one. I was waiting for a number 2 to print right here. Oh, Tony says he's running 1.25. Let me change that while I think of it. Indicators. Raptor. There we go. Okay, I'm going to stay with that. Now, bear with me here while I save it before I forget again. Yes, I'm thinking 1.25 is working pretty good on the Raptor. Okay, David had another question here. Can you explain, David asks, the filter at the bottom of the Raptor? Most of my charts trades, the price goes in the opposite direction of the color of the filter. Okay, before I get too much into David's question, I'm getting a few comments here about the settings. All right, so go here to your indicator panel, highlight your Raptor 2.0. The Raptor has got a lot of tweakability to it, more than any of the other tools, and we'll be getting into this more when we talk about the Raptor tweaks. But the signal parameters, you can adjust the HE, which is the hard edge, that's your number 3 signal, and your signal parameters SE, soft edge, that's your number 2 signal. This extreme retest sensitivity gauges how sensitive the indicator will be to recognizing a number 2. The higher the value, it's an inverse value. The higher the value, the less sensitive the parameters. The lower the value, the more sensitive, or the stricter the setup parameters will be. So the last few days we've been playing with the settings between 1 and 1.25. You can even dial it up higher if you like to play with it. But just know that the higher the value, the more forgiving the market or the Raptor will be in interpreting a number 2 signal. So the number 2 relies on a test of the extreme. Right? So let's find a little bit more textbook number 2. It's not bad. So the market, first, before you can have a counter trend signal, you need to have a trend. Right? So for this number 2 signal that printed here, there was no trend. The market was sideways. So no trend, it's hard to do counter trend. Here we at least have a little bit of a trend. The market comes up, gives a retest, comes back, and produces a number 2 signal, and rightly so. The sensitivity settings that we were just looking at determines or helps the computer calculate whether or not this is an accurate retest of the low. Now, of course, computers, you need to define everything very, very strictly, right? Because a computer cannot interpret on the fly. This is what makes me chuckle about, well, I shouldn't chuckle, it's rude, but when my friends keep talking about artificial intelligence and how it's going to take over the trading world and stuff, no, it won't. Not in our lifetime, anyways. And I say that with a great deal of confidence. And yes, I know AI is growing in leaps and bounds, but there is too much subjectivity in the trading world. And computers, in spite of their ultra sophisticated algorithms, still don't think. They can't interpret data the way a human being does. You see, because here, this is a number 2 also. And we'll get into that another day, but there's a number 2 signal right there. Now, yes, I know that most of the trading that's going on here is actually driven by computers. It's actually high-frequency trading firms, it's computer algos that are initiating the buy and sell orders. And the computers from the big trading firms no doubt recognize this as a retest of the extreme and a failure. But again, it has to meet certain parameters. And I'm getting a little bit off track. But the sensitivity setting allows your Raptor to tell you that, yeah, okay, this is a number 2 based on the test of the extreme down here. If you dialed that value down, so if you made it like a 0.5 or 0.25, this number 2 may not print. If you dialed the value up, say to 5 or even 10 or something silly like that, you're going to get a number 2 printing here, you're going to get a number 2 printing here, you're going to get a number 2 printing here. So you'll get every little hesitation against the prior trend viewed as a test of the extreme, and then the market will reverse and take the opposite signal. So, like I said, I've gotten a little bit off track, and I'll bore you more with it when we talk about the number 2 signal on Tuesday, but that's kind of the gist of it. All right, so David, you've been waiting very patiently. David's asking, okay, what about this filter down here? This Raptor filter is actually the Eagle Trend Trader, all programmed into this bottom bar. Why is that important, you say? Well, most of the times you're going to want to see the filter in sync. However, when you're taking a counter trend signal, it's not always going to be in sync. This one here, your number 2, your counter trend, happen to be in sync. But there will be times when your number 2 signal is going to produce on a opposite color filter. What the filter does show you, however, is changes in momentum or when momentum is static. So when we get the blue blocks and the magenta blocks more or less the same size, that just reinforces that we've got a sideways market going on. When we see, let me go back here to where we actually get a trend change. When we see the block colors start to shift, so we have a large magenta band here, a little blue band, then we're getting smaller magenta bands and larger blue bands, that starts to tell you that, oh, we might be seeing a shift in momentum. You see that? You see how we went from a big purple block to larger blue blocks and smaller purple blocks? Now, you shouldn't dissect this to the nth degree. You should step back a little bit and say, yeah, it looks like we're getting more bullish momentum here, and bearish momentum seems to be waning. All right, so if we came back with a buy signal here now, a number one signal, we might be a little bit more interested in taking that. But you see, it never did come through, and now the bearish momentum is coming back. So that's how you can use the filter there at the bottom. It's kind of a, well, it is the Eagle Trend Trader, it's a momentum filter. So here you can see we had large bullish momentum, and we're getting a reasonable sized block here of bearish momentum, a little bit of bullish momentum, a little bit more bearish momentum. Yeah, Elmer says I've got a number two signal with the default settings. Yeah, I don't know, Elmer. There's something between our data feeds, yours and mine, that we're off a couple milliseconds or something. All right, Tony says we've got 3 macro pullbacks, and yes, sir, you are correct. And each one is printing in yellow bars. Tony's also suggesting maybe getting ready for a trend change. It's certainly possible. Certainly possible that we are going to see a little bit of a push higher here. Certainly if we start to take out some of these little itty-bitty swing highs here on the hawk, we should see something higher. Yeah, Elmer says maybe it's the temperature. It's -8 where he is. Celsius, so that's, for those of you used to the Fahrenheit scale, that's a little bit on the nippy side. That would be like 28, 29 Fahrenheit. Actually, a little bit colder than that even. It would probably be around 25. Okay, Christian's asking, must the Hawk bar brick size in the Raptor 2.0 setting smaller than 8 ticks? So let's take a look here what Christian's asking about. So here, back to the Raptor. Again, the Raptor has settings that you can change. Where's my brick size? There it is. The Hawk brick size. Now, by default, it is set at 6 ticks. And what this does is it introduces your Hawk scalper into your Raptor. Adjusting the brick size will change how the signals are printed. And I'll leave it to you to play with that. But for the most part, I stay with the default settings, the exception being the E-mini S&P, where I will dial that down to 4 ticks. I will also adjust my clouds to a 6 and a 4. And I will adjust my brick size here to 4 ticks. Okay, Marlene says, I didn't get the number 1 or the pre-signal warning. Actually, Marlene, I'm a little bit surprised I got this number 1 signal printing here, because the cloud crossover, it must have just dipped low enough to produce the signal. Technically, the bands are fully in sync now, so the next signal will probably print. Oh, good, Marlene says I fixed it. Another thing you can do, folks, is you can reload your Ninja script, and that will tend to, you'll get that warning, you're going to restart. Don't do this if you have an open trade. And it will reboot your programming. All right, let's see. Are we going to get a green bar sell? Something that we can perhaps try to buy? The NASDAQ hopping around here a little bit. Yeah, you could be right. Francisco says maybe a possible reversal up. It is almost the bottom of the hour, almost an hour into trading, and that traditionally is a time that we do see the market try to reverse on itself. Maybe. It's actually the first session in a little while that the market's actually moved somewhere. It's been so reluctant to do anything. Lots of yellow bars here in the Hawk, a lot of yellow bars here in the Raptor. Well, it's a good suggestion, Marlene. Marlene says you should put the numbers on the other charts now. It really helps. I have very little say-so in that department, so if that's something you guys would like to see, send an email to Adam at indicatorwarehouse.com, and he's the fellow who makes those kinds of things happen. Still looking at that green bar sell. That might be a buy opportunity. Maybe get that test of the extreme after all. Got a ways to go here. Yeah, like David says, everybody's coming back from a bathroom break. You know, It's a little bit off color, but there is such a thing as a trading diaper. The adult diapers. So I guess these guys, when they're watching their computers and whatnot for these trading firms, I guess they tell them, "Hey, you'll be like an astronaut. you can you can wet your pants. It's okay, really. Just put this diaper on." They're thinking about it here. They're thinking about maybe putting in a little bit of a rally. The eagle producing a red bar buy. Technically, the cloud is turned over, but just barely. Just barely. We are against the ATR, and I probably would make it take out the ATR. I'm getting a couple of comments on my trading diaper comment, but yeah, it's true. There is such a thing, as bizarre as it seems. Yeah, Francisco says we got a signal on the eagle. I know, I see that, Francisco. I'm I'm thinking I'm going to let it sync up with the ATR, even though it means letting that signal get a little bit away from me. So this squiggly red and blue line, that's the ATR. And I'm just going to let it get in sync, so if it trades higher, it will have to flip the ATR around. A few more diaper comments here from folks. Christian asking, does the Profit Finder also work on the Raptor 2 or only the DTS? No, I think the Profit Finder still works on... Oh, well, it will. The Profit Finder will work on the Raptor 2.0, but you're probably asking, will the signals generate so that you can test them? That's a good question. That I don't know. I'm going to say... Oh, I don't know. I'd have to try it. It might. All right, we see a market that's struggling here a little bit. We've gone from a pretty good uptrend, an attempt to make a downtrend. We actually got a cloud crossover signal here, but we're trading right near the lows. Never really did get a good test of the extreme. That doesn't mean that signal isn't a valid signal, but again, you may want to dial down the risk amount. You may want to entertain a second push on the signal, in which case our entry would be down here. But again, it becomes a trade management issue. Where do I place my stop? Where is my stop going to tell me I am wrong about the trade? Well, right now, the only real spot is way up there. And Trade Manager is suggesting that I would not be able to afford that type of scenario. getting a first micro macro cross higher now on the hawk. Oops. That's not my proper profit target, but we'll leave it where it is anyway. All right, 731. All right, well, they're trying, a little bit shy of our break even. Our scalp target tends to be just right above that break even trigger. Now we'll see if we can run this one out a little bit. If it is a trend change, of course, we're going to see perhaps a little bit of a retest here on the low, so we don't want to keep the stops overly tight. Francisco asked, how about using 3 ATRs for entry stop? Sure. Yeah, I like a 3-period ATR. It's not rocket science. You know, you put your stop on here. If it looks like it's following the market reasonably well, then yeah, go ahead, run with it. You know, at the end of the day, it is your money. I can make suggestions to you, but it is your money. If you want to run an ATR stop, if you would rather have your stop right here than down here, then by all means, put your stop right there. For me and my money, I'm more comfortable with my stop down here to start. I know I can always raise it. I can always reduce it. Shoot, if I wanted to, I could bring it right up here right now if I wanted. But what would be the point in that? I would much rather just give it a little bit of a push with the mouse and make the market go higher. Get up there. Francisco asks, what is a good preset for your break-even trigger? Typically, I look at about 75 to 80% of my profit objective. Remember, if my traditional 10-tick target has my break-even or my profit target right there. So my break-even is set at 8 ticks. I figure if the market gets 8 ticks to my 10-tick target and then fails, well, I'll take the break-even stop out. Sometimes that will work well for me. Sometimes it gets me stopped out early, as it did in our first micro-macro cross signal to sell here. The market brought me in, came down, hit the break-even, came up, or hit the break-even trigger, came up and stopped me out at break-even. And as you can see, the market fell off a little bit more after that. If this, well, we'll use that as my target. I will roll my stop so it's about 3/4 of the way to my profit objective. So on a 10-tick target, that would be about 7 or 8 ticks. On a 20-tick target, 15, 16 ticks. On a 40-tick target, probably around 30 ticks, 35. Yeah, Christian, it's 6:31 Pacific time, or I guess 6:36 now. Sorry, 7:36 Pacific. Ay, thank goodness it's Friday. I can't even read my clock. Yeah, Christian says, so you've got the full day before you. I'm going into my weekend. My local time is 5, well, when you wrote that it was 5:31, so that would be 5:37. Where in the world are you, Christian? I forget. You're in Europe, I think. Nicely done, Ryman. Ryman says, I took the number 2 signal on the Raptor. So Tony's saying, I'm printing a number 2 as well. So it must be this one right here. Nice reversal. Oh, or maybe it was this number 2. At any rate, Ryman says, I had 2 contracts. I'm still a chicken and closed the trade, but I got 26 ticks, and I'm happy. Nicely done, Ryman. You know, anytime you take money out of the market, you're doing okay. All right, this 51-56 area turning out to be a little stubborn. Got to get on the other side of that. And if we don't soon, then I'm going to get serious about bringing my stops in. Maybe below this bar here with this little bit of a tail to it. Come on. Don't make me influence the market with the mouse. It's not fair to other traders, but all right, here we go. Just give it a little bit of a push just to get the flow in the right direction. There we go. Come on, a little bit higher. Tony says he's short on this number 1. It will press one more time, Tony, and I think that's what we're looking at here is you and I are on the opposite sides of this equation. I'm looking for the swing lower and then a possible reversal and the market to go higher again. Tony's looking for a swing lower so that he can adjust his stops a little bit. I'm assuming his stops are a little bit higher up here. Francisco says, I'm trying to preset two break-even triggers at 10 ticks with the break-even at 10 ticks and the second one at 20 ticks on the hawk. I'm not sure you can pre-program two break-even triggers. The software allows you to set one break-even. So you go here to your strategies, and on your trade manager at the top, you can set your break even. So first you need to turn it on, then you can set your break even trigger and how much profit you want to lock in at break even. Sorry for influencing the market there on you, Tony. I didn't mean to push it that much higher. Okay, so we'll start rolling my stops. Tony says, put that mouse in a trap. Yeah, sorry. I didn't realize you were short. You should have told me earlier. I would have pulled the market down for you. All right, so we're just short of the break-even trigger. That's close enough for me. I'm going to force that trade to break even now. And we're well past our high probability profit target, by the way. Oh, no, we're not. We're just kind of sitting on it right now. But we did pass our high probability target. There we are. So kind of being stubborn now here around the 51-59 area. Slight hesitation. You can see the bar trying to trade a little bit lower. And the problem we were encountering with this trade all along is the fact that we haven't had a real decent test of the extreme. Right? So here's the high. Normally, the way the market unfolds is we see a retest, and then prices start to unwind. And then we'll see a retest and prices will go the other way. And that's typically what happens, but we never really did see that really good retest right there. And I see prices floundering a little bit, so I'm going to go with a tighter stop now here. There we go. Try to protect a little bit more of that open profit. I wonder if I should just punch out with that. What a balanced market, though. Made a little move higher, made a little move lower. It's just happy to be right there, 51.59. Okay, so got tapped here at 51.57.5. All right, David has a question here. On my trade manager, when I enter, I'll put the stop further back like you suggest, and on its own, trade manager will bring the stop closer. I'll have to drag it back 3 times or so to get it to stay. How do you fix it so it won't move on its own to the preset stop? Simple. Turn the stop off. This trail indicator enabled box, uncheck that, and your stops will no longer move automatically. So while that is off, your stop will stay where you put it. It wasn't a huge run up, but it was a profitable trade all the same. All right, Tony, here's your chance to adjust your stops a bit. Market trying to head lower. It may still pick up that downtrend. You know that? Like, you look at the charts, the daily charts, the weekly charts, you just can't help but think the market is top heavy. And yet, it keeps going higher. Yes, David asks, so if I wanted to move after going, just click it back later? Yes. So if you're in a trade, and you can adjust your stops midstream as well. So let's say, like we took the first micro macro cross signal, I set my stops like that originally. I don't want it to move. Ignore the profit target for a moment. I don't want it to move. Um, and let's say at this point I want the stop to start moving for me. Then I can, let's say I'm going to go with the ATR stop, and I want to preview it, and I see that, okay, that looks all right. I will accept that stop, and then I will activate that stop. Now, if you want, if it doesn't, it will move as soon as the next bar finishes. It will move automatically. If you want to move it earlier, you can click accept again, and it will automatically grab the stop from down here and move it up to that last dot. It's worth your while to try it. Do it in demo mode. So just take a trade and play with your stops. See what happens with your stops. Say you're in the ATR stop, and let's say you move to a chandelier stop, and you click accept. Watch what happens, what Trade Manager does with your stop loss. What if you're with a fixed stop and you're going, 10 ticks or 40 ticks off of the high? See what Trade Manager does with your stops. Will Trade Manager actually take your stop if you're long and take your stop from down here and move it up there? Will it actually do that? No. I'll give you that. The preview to that, no, it won't. But like I say, it's worth your while to play with these things and get a handle on it and see how it works. It doesn't take long. See how the bar high low, how it adjusts your stops given your stop strategy. And how, if you make changes, what will it do to your stops? I'm happy to answer any questions for you, but sometimes experience is the best teacher. Just playing with it, you'll learn a lot. Just make sure you do it in demo mode. Yeah, good question here. Mr. Buckaloo is asking, Eric, what do you make of the different directions on the hawk of the E-mini and the NASDAQ? I know, isn't that something? The E-mini's kind of holding strong, and the NASDAQ rallying a little bit. Allow me to load up the mini Dow, and I'll bring that over here in a moment. While the stock market does have a tendency to move together, they don't always. All right, so here now is the mini Dow, which is following the S&P a little bit closer. If the Dow and the NASDAQ were in sync, the E-mini would follow. But the E-mini a lot more conflicted about its direction, as is the NQ, or the YM, the mini Dow. Honestly, I trade each instrument individually. I know there's a lot to be said for knowing what the Dow is doing and what the E-mini is doing. But as you can see, they will move independent of each other. I don't know. The fact that the E-mini and the Dow are not rallying, it could weigh here on the NQ. We could see a little bit of a move lower here, which would help Tony out a bit. Tony says the mid-cap's about to pay off to the short side with a number 3 signal, a hard edge bounce. And here goes the YM and the E-mini now ticking lower. And that's kind of putting a little bit of a wrinkle here in the NASDAQ. Seems like their momentum, their upward momentum has slowed a little bit. Al is asking, are you running your data series at 24/5 for all the birds, including the raptor? Yes, I am. Yeah, look at that, the NASDAQ. Is this thing still on? Yeah, it's still working. The NASDAQ just holding strong, refusing to tick lower, and I'm watching the E-mini and the Dow head a little bit lower right now. All right, well, that might be it for us this morning. I think we're going to see the NASDAQ try to test the lows. It does appear as though overall we're in a little bit of a sideways trading range again today, albeit a larger range. So the high of the morning, 51.67.5. The low of the morning, 51.48.5. So there is some room in here to play. We may see a better test of the extreme here before the market tries to run up and retest the highs. Now I'm just spitballing here because overall this trend is very, very much sideways with a slight bullish tint to it. So what I would anticipate here is, oh, are we going to get a number one to the upside. What I would anticipate is a little bit more of a retest here, a proper retest of this low. If we do produce a signal here, it's a kind of situation where you're either going to have to dial down the risk amount or perhaps look at taking a second push entry or even entering above the high of this swing. Regardless, I think you need to cover the trade below the low. But we just have the warning dots here at the moment anyhow. And I think that's where we're going to leave off today. So have yourselves a wonderful weekend, and I will see you guys again next week. We'll talk to you then. Bye for now.